Trading Live with Oscar Carboni, the chart whisperer, and that would be me. Good evening, traders. This video coming to you on a Thursday night for trading, Friday, January 8th, 2016. Wow, it's been exciting out there. Before we get into this, you must know that futures trading is extremely risky, causes substantial financial loss, is not suitable for anybody that gets their license out of a crackerjack box to drive this bad boy machine. If you don't know what you're doing, if you don't know about stops, you need to get out of here, because this is a very serious game and the odds are increasing dramatically as this thing runs around. So know the risk and let's get moving. Traders, a red OMNI for trading once again on Friday in ES, NASDAQ, DAX, Dow, Trini, the usual suspects. You know what I'm talking about. So, starting off with a red OMNI, meaning we're going to start the day by selling the rallies and see where we end up. The last video I presented you with a couple of nights ago, I told you crude should go down, gold should go up, the S&P should get hammered. How about that for results, huh? It's exactly what happened. That is all technical analysis, traders. That's why they call me the chart whisperer, because I listen to these charts as they whisper to me. I take the trades directly from the charts and I give them to you. So, here we go. The stock market indices are now at a do or die level, or let me say this. The stock market indices do or die level is approaching, says the new chart masterpiece this evening. I've got a new chart called Chart Masterpiece. It is the new chart masterpiece, what we're following for this week and into next week. And I think you're going to love it. But it does tell me there is a do or die level coming in our U.S. indices. And if they fail to hold this next level, that's the do. Guess what happens if they fail to do? You got it. So let's see. I'll show you the chart. Gold's still running, just like I told you a couple of days ago, and the OMNIX have been blessed. We've been buying it and buying it and buying it. I think we missed out one day so far in that rally by not getting a fill, and that was today. All right, so we'll catch them next time. Then there's a chart, a market I like to call the sleeper. I don't think anyone's paying attention to it right now, but I am, and I'm going to show it to you. Traders, if you like the analysis in this video, come on down to livewithoscar.com. Join me in my free trading room and allow me to help you get through these rough and tumble markets and figure out what's going on minute by minute as the markets whip around. I know it's not easy out there. If you need help, join me at livewithoscar.com. Now, before we get into the analysis, let me remind you all about China. Let me remind you all about a little something that I have been telling you about since it began in 2008. Back in 2008, China was still almost a third world country, right? They didn't really have this emergence till about then. Why? The U.S. lowered interest rates aggressively, lowered them, and kept them that way for the last 7 or so years. And China has enjoyed every moment of it. But remember this. When we were on our way down and lowering rates and the economy was getting destroyed in 2008 and 2009, China was on its way up. We are now raising rates, and guess what's happening to China? They are feeling the opposite effect. It's exactly opposite of what was going on when the U.S. was crashing and lowering rates in 2008, and China was going up because of that. Now, the Fed, Aunt Janet Yellen, just raised the interest rate a 1/4 point. I kid you not, the Chinese economy is so wrapped up in our U.S. dollar that 1/4 point is making them have a major adjustment. And that's what you're seeing. The U.S.'s economy can continue on whether or not China flips around and has crazy people selling out of their shares. So, they are feeling an effect of the 1/4 point interest rate. It is an adjustment in their market that is happening over there in China right now. Do not get nervous that, the Asian contagion people are already talking about. The U.S. economy is all right. I've told you this in my last video. We can have a bearish channel or a bearish leg, if you will, or a bearish series in our market, and not crash the economy. This is 2016, not 2008. The economy was not on sound footing. It was overblown in 2008. We are on much better footing today as an economy. The market, yes, it wants to go down. So be it. That doesn't mean that we're going to have a crash in our economy, okay? 2008 did. 2016, it's not expected. Let's see where we're going to go. All right, traders, with no further ado, let's go look at some charts. Traders, in my last video, the one right before this video, number 1420, I showed you this chart, and I said, look, we had the crack to number 1, then we had the crack to number 2, and I think we're getting a crack to number 3. Is number 3 coming? And I left you with this chart with the question mark. That's where it was, and this is what happened so far. Look at those two. Now, you look at this line and go, big deal, Oscar. It's only this big of a line. That is 110 plus points. So far, since that drop started, 110 plus points. We're only halfway to number 3 if we're going to get there. That chart worked. Bravo for technical analysis. And the OMNIX on my site, I've been short almost every day for this entire move. Bravo, OMNIX there. Next, Dow Jones Transportation Average. Here it is, traders. The new chart masterpiece. Yay! All right, serious. The new chart masterpiece, why do I call it that? Traders, this goes back to the lows in 2009. Bang, right down here, okay? The market goes all the way up, and it holds inside of this channel the entire way. Then it gets a little heady, and it gets above the channel, tests it, holds, continues higher. We break back into the channel. Here's where it gets interesting. Here's your 200 bar moving average. The last time we cracked it from a level this high, we were here. That was the high of 2007, into the crash of 2008-9. So the high was right about here. We broke the 200 bar moving average up there. You can't see it because I can't fit it all on one chart, but it was up here. We broke the red 200 bar moving average and crashed all the way down here. That's where the channel began. Since then, we've only come down to this area once where the channel and the average get together, and it held well. Beautiful, great hold, 2012. So that's actually 2011 right here, my bad. 2011. So it holds where the average and the channel come together. We have the same exact situation now in 2016. The average and the channel have come together. However, we are much higher hitting that average now. The chance of breaking it is a bit greater, and you've got the channel right here. Traders, that is your do or die chart. Dow Jones Transportation Average, the leader of U.S. indices, the weekly chart. Look at the hold since 2008-9 lows. Boom. Now we're approaching it and the same average that held last time. But when we did break the average up here, we had the major break all the way down to the crash lows. Interesting, isn't it? Do or die. Right here, transportation average, it's got lower to go, of course, to get into that area. But once it gets down there, if it does not hold, boy, oh boy, it could get ugly out there. The new chart masterpiece. Take a look at it. Next. The Russell 2000, same thing, traders. Look at this. Right there at the 200 bar moving average. It has not been there for a long time. Do or die in your Russell, another leader of U.S. indices. The two leaders are at do or die levels. Very interesting. Then you've got the German DAX, traders. Look at this DAX chart. The German DAX is incredible here. Take a look at this. 2011, it hits this line. It hits it again, 2014. It does this whole stretch without hitting it. But then it comes back and hits it in 2015 and again in 2015. Remember, this is a weekly. There's a lot of time in between these hits. Then it runs back up and it hits it again in 2016. Isn't that way more rapid than it used to be? So now that we're testing this line and testing this line, we may test this support line once again and crack it. I don't know. This is part of the do or die scenario. So once again, even your German DAX is in do or die territory. Okay, traders, here it is, the sleeper. This is the one I was telling you about. Daily sugar chart. How many of you are watching sugar? How many of you ever watch sugar? Well, I do. I used to be a coffee, sugar, and cocoa broker in the pit. I keep my eyes on sugar. Check out this chart. For a long, agonizing time, it stayed inside this channel, and it just dropped every time it hit the OMNI Trading Academy's proprietary moving average, OTAPMA. Would hit OTAPMA or the top of the channel at the same time and dump. Up there again, OTAPMA and channel, dump. OTAPMA channel, dump. Gets above both OTAPMA and the channel, rallies up, comes back down and hits OTAPMA and has a big fat rally out of there so far. It hit OTAPMA here, or just about hit it, and came all the way back up to here. And if you ask me, why can't we construe this as some sort of a flag? Is that not a flag? Bull flag above OTAPMA after testing it, after breaking out of that. I call that market a sleeper. That is my sleeper. It is the sleeper, Sugar Daily. Take a look at it for yourselves and then come on down to livewithoscar.com and I'll tell you about the sugar chart. So traders, you've seen the charts. I mean, is that not chart whisperer stuff or what? That's pretty good charting. Take a look at it for yourselves. Chart masterpiece is pretty interesting. That is do or die. We'll see where it goes. Same in the DAX. Same thing with the Russell. These markets are telling us if they cannot hold that level, we will have a more dramatic downside slide coming our way. Again, that's the market, not the economy. Keep those separate for now. Unless the market finally starts to take the economy down, I'm not going to worry about that at this juncture. All right, traders, so that's about it. Come on down to livewithoscar.com. Check out that sleeper sugar chart. Remember, the gold's still looking decent. And new chart masterpiece tells us if we don't do, we will likely die. Livewithoscar.com. Remember, keep your emotions out of trading. One of the best things you can do to help keep those crazy emotions at bay, and I know that is not easy, but try to say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. For now, that is. Emotions are out. Rock and roll. I'll see you all at my site. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.